Silver has just hit an all-time high, $88.16. And right now, everyone's talking about electric cars, solar panels, and a thriving industrial market. But here's the twist. There's something much bigger at play, something you're not hearing about in the news. What if I told you this surge in silver isn't just about supply and demand? What if the real story is a looming Supreme Court decision that could force the US government to pay back billions it doesn't have? This could change everything, your financial outlook, your portfolio strategy, and how you think about the dollar. Stay with me. The implications are huge, and the timing couldn't be more critical. This isn't just another price spike. This is about a fiscal bombshell that could reshape your strategy for the next few weeks. Keep watching, because the real reason silver is soaring is something you're not hearing anywhere else. You've heard the headlines. Silver is surging. But here's the question you should really be asking. Why now? The media says it's about electric cars and solar panels. They'll tell you it's a booming industrial market. But let's take a step back. This isn't just about what's happening today. This is about something much bigger brewing beneath the surface. Right now, there's a Supreme Court case hanging in the balance, one that could trigger a $200 billion obligation for the US Treasury. And if that sounds like a stretch, it's not. The numbers are real, the stakes are real, and the timing, that's what's going to make everything explode. Here's the question nobody's asking. What happens to the dollar when the government suddenly needs $200 billion it doesn't have? And more importantly, how does the financial system react when it can't hide this kind of debt anymore? This is what you need to understand, and this is why silver is moving like it is. Let's break it down. The Supreme Court case revolves around tariffs imposed during the Trump era, tariffs that could be declared unconstitutional. If that happens, the US government will be forced to refund every penny it's collected from these tariffs over the last few years. And here's the kicker. This isn't a simple refund. The Treasury has to pay back with interest. We're talking a potential $200 billion. That's a massive number, and the government doesn't have it just sitting in an account. So where does it come from? The answer is simple and terrifying: new debt. The government will have to borrow this money fast, and that's where the bond market starts to get nervous. If the Treasury goes to the market for $200 billion it wasn't planning on, either yields spike to attract buyers, or the Fed steps in and prints the money. Both options are catastrophic for the dollar. And when that happens, smart money doesn't wait around. They start moving into hard assets like gold and silver. Now let's watch how this escalates. In normal circumstances, the government borrows money when it needs to, usually in a controlled way. But this is a fiscal shock. The scale is unlike anything we've seen in recent years. We're talking about $200 billion that wasn't planned for. And once the Treasury starts issuing that much debt, the bond market has to react. The question is, will they find buyers at current interest rates, or will they have to offer much higher rates to get anyone interested? Think about it. If the US needs to borrow fast, the cost of borrowing goes up. The yields climb. And as the yield curve shifts, it means the government will have to pay more to service its existing debt. This isn't just a bump, it's a full-scale crisis waiting to happen. And when that happens, the bond market's stability is tested, and it only takes a few smart investors to notice the warning signs. When these kinds of fiscal shocks hit, we don't just see a dip. We see a shift. A massive one. And that shift leads to one inevitable outcome: inflation, more debt, higher yields, and a weakening dollar. But we're not done yet. Now let's dive deeper into the evidence, and it's about to get even more uncomfortable. Remember those bond yields? As the US Treasury starts scrambling to meet its obligations, foreign buyers of US debt may start backing away. And if they do, the Treasury will have to offer even higher interest rates to get anyone to take those bonds off its hands. But here's where it gets tricky. Higher yields mean the cost of borrowing spikes, and that triggers a dangerous cycle. The bond market can only handle so much, and if the Treasury has to issue an unexpected $200 billion, it could push yields up across the board. When that happens, investors are going to start asking, can the US actually manage its debt without defaulting? This is the point where silver starts to look really attractive. As the value of the dollar comes into question, precious metals become the safe haven. And guess what? Silver doesn't just move in response to demand, it moves because the financial system is breaking down. Now let's really stack the pressure. A couple of developments are happening fast, and this is where things could spiral. First, The Shanghai Gold Exchange, a major player in physical silver trading, is showing silver prices 10 higher than New York's. That's an 11% premium, a massive gap. In any normal market, that wouldn't happen. But right now, traders are pulling physical silver out of Western vaults, shipping it east as fast as they can. And it's not just the silver market showing signs of stress. The bond market is already showing cracks. Investors are starting to flee U.S. debt, demanding higher yields, or worse, preparing to sell. What happens when these markets start to break down? The floodgates open and liquidity drains out of the system in seconds. This is where the situation goes from uncomfortable to catastrophic. If this continues, we could see a full-scale run on silver and other hard assets, driving prices even higher. And if the Treasury keeps printing money to cover its massive debt, things will only get worse. What happens when this liquidity crunch hits? People start looking for safer places to park their money, and they're looking at silver, gold, and other hard assets. That's where you need to be positioning yourself right now. Now let's zoom in on you. Yes, you, the person watching this right now. This isn't just about markets and numbers. This is about how this crisis, this fiscal shock, affects real people. Everyday people like you and me who are trying to protect their savings, their wealth, and their future. If you've been following the rise of silver, you're already feeling the pressure. The truth is, when the dollar weakens, it's the regular people who get squeezed first. Inflation rises. Costs of living go up. And if your savings are in dollars or dollar-denominated assets, you're losing purchasing power. But here's the part that hits hardest. It doesn't take a major economic collapse for this to happen. It just takes a slow, steady erosion of confidence. And when people realize the dollar isn't as stable as they thought, they start moving their wealth into things that can't be devalued by policy decisions, things like silver. If this feels familiar, if you've seen the writing on the wall and you're already thinking about hedging your assets, drop a comment. Let's talk about how you're protecting yourself. Let's step back and think bigger for a moment. This isn't just about a single fiscal crisis or a Supreme Court ruling. It's about the system that allows all of this to happen. The real story here is the leverage, the incentives, and the spectacle that's keeping this train moving forward. You see, the system is built to hide the true costs until it's too late. Governments borrow money with the assumption that they can always refinance it. But when a fiscal shock hits, like the one we're seeing now, it exposes the cracks. The mechanism that lets governments borrow trillions in the first place is the belief that they can control inflation and the value of their currency. But that system is fragile. The truth is, the U.S. government has been playing a game of financial gymnastics for years, pushing the limits of what it can borrow, what it can print, and what it can promise. But there's a tipping point. When that tipping point is reached, hard assets like silver become the last safe haven for anyone who can see the storm coming. What you're seeing in silver right now is the early warning. Smart money is moving in, positioning themselves for what's coming next. And once it's clear to everyone else, it's already too late to act. So what happens next? There are two paths forward, and both carry immense risks. The first path is the possibility that the U.S. government finds a way to delay the fiscal shock, a last-minute intervention, or a temporary solution that buys them time. If that happens, silver might pull back, possibly dropping back to $75 or lower as panic subsides and traders take a breather. But the second path, that's where things get really interesting. If the Supreme Court rules against the tariffs and forces the government to pay up immediately, then we're looking at a full-blown crisis. A $200 billion obligation in a short time frame will send shockwaves through the financial system. The bond market will react fast, yields will spike, and the Fed will likely have to step in, printing money to cover the gap. That's when silver and other hard assets will go through the roof. The clock is ticking. If we hit that second path, the momentum will be unstoppable, and silver's price could see levels we've never imagined. But right now, the market is pricing in uncertainty, and that's where you need to position yourself today before the storm really hits. This is where we stand. The fiscal shock is coming. The US Treasury could soon be facing a $200 billion obligation, and how that plays out could change everything you know about the dollar's stability. If the government starts borrowing on a massive scale, it'll push bond yields up, devalue the dollar, and drive more investors into hard assets, especially silver. The mainstream narrative wants you to believe this is just about industrial demand or the green energy transition. They want you to think silver is rising because of electric cars and solar panels. But let's be clear, the real real reason silver is skyrocketing is far more systemic. It's about the breakdown of trust in the dollar and the financial system. We're in the middle of a massive shift, and the smart money is already positioning for it. The question is, are you ready? Will you act before the storm breaks, or will you wait until it's too late? If you found this analysis valuable, make sure to follow for more insights. The next few days could be critical. Don't miss out on what's coming next. Stay sharp and always be ahead of the curve.